Thank you for tuning in and welcome back, team. In today's episode of Real Estate Facts, you'll learn how to use a mortgage calculator. One of our great teammates, Sickish, have reached out to me in the YouTube comments asking me how to use a mortgage calculator. So thank you, Sickish, for reaching out. Today's video is for you and everyone else out there wondering how to use a mortgage calculator the right way. My name is Andrew Finney, your real estate geek. If you need help finding a top agent where you live, or if you simply want to drop me a line to say hello, my contact info is below. If you haven't already done so, please go ahead and subscribe to this channel now and like this video. Thank you. Okay, team, so as we get into this mortgage calculator, we're going to go through how to use it, in specific how to calculate your principal, your interest, your property taxes, and your homeowner's insurance. Those are the four main components that go into what we as consumers feel as a monthly mortgage. Even though a mortgage is technically just the payment and the interest on your loan, you also have to factor for the property taxes and the homeowner's insurance, because that's what you're going to be paying every single month as you own your home. So if you'll go with me to Google, then we're going to go ahead and type in my website, which is Andrew Finney Team. If you go ahead and do that, follow along on the screen. It's going to be a little bit easier probably if you're doing this on desktop. It'll absolutely work on your mobile. It is a mobile responsive site. Go ahead and click the link to Andrew Finney Team. Scroll over to where it says Buyers on the top header, and then down to where it says Mortgage Calculator. So now we're going to be getting into the actual mortgage calculator itself. This is what it looks like. So it's going to depend on how much home that you want to purchase whenever you're looking at this, but this is going to give you a really darn good idea of exactly what your principal, your interest, your property taxes, and homeowner's insurance are going to look like. And if you have an HOA or you're considering a community that's within an HOA, then you'll absolutely have the opportunity to include that information as well to get a better budget idea of what you're going to be looking at on a monthly basis. Now let's go ahead and change these numbers around. Let's say that on the purchase price, you're looking for a $400,000 home. So if you're looking for a $400,000 home, let's say that you're using a 3% down conventional. You notice that whenever we did that, here's our purchase price, $400,000. Here's our down payment percent 3. It went ahead and put this money up here for you at $12,000 for your down payment. So that leaves you with a loan amount of $388,000. Now let's make our annual interest rate. Let's take it to 5.25% in this example, right? So now it shows right here. Now this is where a lot of mortgage calculators across the internet will show you your monthly principal and interest, but it doesn't always show you what your property tax is and what your homeowner's insurance looks like all together. So it can be a little bit deceiving because that number is always lower when you're just looking at the interest and the payment itself. So now let's take a look at the annual property taxes. I'm going to use Las Vegas, Nevada's property tax rate as an example. If you want to find out what your property tax is in your area, please contact your trusted real estate advisor. If you don't have one, then please let me know. I'm happy to put you in touch with the top agent in your area. Or you can also just simply Google what the current property tax rate is in your city. So for example, property tax rate, Las Vegas, Nevada, right? So we're going to change this to 0.91. That's what we are here in Las Vegas. This shows a property tax amount right here. So you can already see the difference right there alone from your monthly principal and interest payment, and then just adding your monthly property tax, how significant of a difference that is. Then you have your annual insurance. Now this is going to be subjective to the type of coverage that you carry and whether you also have earthquake insurance, flood insurance, or any other special policies attached to your insurance. You want to talk to your insurance agent to figure out the level of coverage that's right for you and that helps you have the best insurance for your home and your needs, okay? But for this example, let's just say it's $600 annually, which is $50 a month. Then we're going to go into your annual PMI. Now, it's important to note when we're talking about PMI in specific, you're going to have a PMI and an MIP. The difference of which is that a PMI is actually a private mortgage insurance, okay? Private mortgage insurance is for conventional loans. An MIP, on the other hand, I know this sounds very similar, an MIP is a mortgage insurance premium, and they're for federally insured loans like an FHA loan. So there is a difference between the two, and if you have more questions about that, please reach out to your trusted local loan officer and go ahead and ask them the questions about that and how that works in your loan, okay? Now let's say that you bought in a community that doesn't have an HOA. So then that would mean that you have a monthly payment, principal, interest, property tax, and homeowner's insurance of $2,778.55. This part right here where it says tax deductible portion of the payment will actually assist you in knowing what you should probably talk to your tax advisor about come next year's tax season, okay? Now let's talk about the qualifying information. Now for this illustration, we're going to use an example of taking the national median income. If you Google national median income right now, you'll see that's about $59,000 per capita. So let's say that you're buying this house with someone else, maybe your spouse, a significant other, what have you. And there's two of you that are qualifying for this loan. So let's take $59,000 and multiply it by 2, so we'll come up with $118,000 as an annual gross income. So let's go ahead and change that math around here. The next thing that we need to start factoring for is what's called your debt to income ratio to see if you're going to qualify for this loan. So then let's talk about monthly debt. Now, since there are two of you, let's say that you both have a car. Let's pop up our calculator here so you can follow along, make it a little bit easier. So let's say that you both have a car, okay? So let's say car 1 is $350 a month, okay? Let's say car 2 is $350 a month. Let's say that you both have credit cards and pay about $150 a month onto your credit cards. So that gives person 1 $150, person 2 $150 servicing that. And let's say only one of you have student loan debts that are about $250 a month total debt. So that'll take our total estimated monthly debts at $1,250. So we're gonna go ahead and put that in here, okay? $1,250. And it says that you're likely to qualify for the loan. It says probably, and it'll even show you what your possible maximum qualifying amount is right here at the $601,000. Now that could be a lot more home loan than you need, but then what are these things down at the very bottom here when we're talking about current payment to income ratio? Your max is 40% and your current debt to income ratio, the max being 50%, right? Those are called debt to income ratios, and this is where lenders have guidelines, very specific guidelines that they have to follow that are set from Freddie Mac and Fannie Mae. So if you're wondering about what like a front-end ratio is, a front-end ratio is essentially this number right here. And to best help you understand what a front-end ratio is, a front-end debt-to-income ratio is commonly known as like a mortgage-to-income ratio. So it's simply computed by dividing your projected monthly mortgage payment by your monthly gross income. So if a typical monthly mortgage includes the principal, the interest, the property taxes, and the homeowner's insurance that we talked about above, then this is what this amount is. So now let's assume that you have a $2,500 a month monthly mortgage, right? And let's assume that you have $10,000 a month in income, which fits this illustration extremely well. So then you would have a 25% debt to income ratio with that example, okay? So now you look at the back-end ratio, okay? And the back-end ratio, think of the back-end ratio as like just straight up debt to income ratio. It's a broader look at your current debt position and your ability to take on a home loan debt and repay your loan. In the back-end ratio, the reason that number is higher is that it's taking into account any of your car loans, your personal loans, student loan debts, your credit card debts, anything like that, and it's adding everything in it together and including, and this is very important, including the estimated monthly mortgage payment right here that we were talking about earlier. So then what happens is you take all of that number together and you divide it into your gross income that we put up here, right? And if you take that and you divide it in there, it's going to give you this ratio for this example of essentially almost 41%. Now you'll notice that the maxes are already set here. Now the way that I designed this with the developers and the team that built this website for me, Sierra Interactive, is to be conservative on this. So we'd rather err on the side of caution and help you have a better understanding of your financial situation and what you could possibly qualify for with this calculator, and give you a reasonable expectation of what your monthly mortgage is going to be whenever we combine the payment, the interest, the property taxes, and your homeowner's insurance, right? So it's 40% over 50% is what we're looking at, which is typical of like a conventional loan. I know that conventional loans might be dropping their back-end ratio to 45%. There is some chatter about that. At the same time, when you start looking at federally insured loans like an FHA loan, a VA loan, or a USDA loan, their ratios are different. So your front-end ratio being this right here, right, could actually go as high as 45% with a back-end ratio that could go as high as maybe 55%. Now, again, as a trusted real estate advisor, I'm not a licensed loan officer. The best source of information on anything to do with your home loans are actually going to be your local loan officer to assist you with this. So today's video is just really quick. Very simple, just to show you how to use a mortgage calculator so that you can better estimate what you could get qualified for. Because sometimes, let's face it, you're out there searching right now, you're watching this video, you're probably not quite ready just yet to talk to a trusted real estate advisor, not quite ready yet to talk to a local loan officer, and you want to kind of get an idea of what your monthly is going to look like. Or maybe you've already met with that trusted real estate advisor and you're trying to figure out what your monthly payments would look like and how much you could qualify for before you talk to a local loan officer. So that's the purpose of today's video, is to give you a good understanding of what you'd be looking at as you're searching for homes that you want to buy, or trying to figure out how much home you can realistically afford. Use this calculator. Again, keep in mind it's just a tool, and you'll want to meet with a trusted real estate advisor to go over the home buying process and to introduce you to a top local loan officer to assist you. So now it's your turn. Tell me what was most significant to you about this video in the comment section below. What really stood out to you? Was it the importance of factoring for your payments, your interest, your property taxes, and homeowners insurance? Or was it actually knowing a little bit more about how debt to income ratios are computed and how much you could qualify for? As you can see, as you saw in this example, the maximum that you can qualify for is probably far more than you realistically need to be able to buy your new home. Tell me what was most significant to you in the comment section below. Now I'm going to go ahead and pop up my contact information. If you'd like to reach out to me to help you find a top agent to help you buy your home in your area, my contact info is on the screen and down below. Also, if you just want to drop me a line and say hello, I always love to hear from you. If you haven't already done so, I'm going to ask you to do 3 things. Number 1, please subscribe to this channel. Number 2, please like this video. And number 3, please share this video around with someone you know is going to be able to help, because I'm sure that you can think of just one person right now that could really benefit from this video. In between now and next time, I'm wishing you and yours a lifetime full of love, wealth, abundance, and happiness. Enjoy an amazing day.